Today is a very, very exciting video because we're going to be talking about with real numbers from ARK Invest, which is an actively managed investment fund that manages about $50 billion of total assets. They just released to the public their 2023 big ideas. And one of the big ideas is super relevant to this channel, video games. And we're going to be talking about how giving real asset to players, real assets, like real ownership to players in digital worlds is going to just greatly expand the growth of gaming. And this is all according to ARK Invest, who've done some incredible research. So this is like really, really exciting stuff. If you missed the first part, you can check it out. It'll be linked in the description. But let's jump into this part. So starting off here, we're going to focus not on the blockchain, but on how immersive virtual experiences should galvanize the next wave of gaming. So they're talking more about how gaming is becoming more social, and they're talking more about the metaverse type of stuff. Honestly, this slide is not as impressive as the other ones, but let's just look at it, because they're saying that as the gaming industry transitions to full service virtual worlds, video games and social media could merge as consumers socialize and entertain in game supported virtual spaces at the expense, they're saying, I think people just work less and there is no expense, but at the expense of physical places where people are kind of interacting. So they're pretty much saying, like, people aren't going to Disneyland anymore. People are going to be going to virtual theme parks, which I think people are going to virtual theme parks, but I think in the future, there's no reason why people aren't going to want to also go to physical Disneyland as well. I think in general, with artificial intelligence and just the growth of productivity, humans are just going to need to work far fewer hours, and there's going to be enough time for more of both, or maybe just a lot more digital, but still the same amount of physical world. At least I think that would be healthy. But essentially, based on what they're saying, according to ARK's research, the convergence between gaming and social media should boost the growth in gaming revenue from 7% at a compound annual rate. That's what gaming growth has been averaging during the past 5 years, to 10% during the next 5 years. So they're expecting a little 3% boost because of like the metaverse or social. I think the boost is going to be way bigger, and it's going to have a lot less to do with social and a lot more to do with this next slide that we're looking at. And this is where it starts to get, actually, we're skipping this one. Enough teasing. Let's actually get to this. I'm just going to make this full screen so you guys can really, really see this. So based on the introduction of property rights, this is what I'm so excited about, guys. Blockchain gaming empowers gamers by giving us real property rights of our digital assets. And I don't think people get how big this is going to be, but this is what ARK's saying. Based on the introduction of property rights, digital assets should accrue significant value. Physical and intellectual property rights correlate positively to GDP per capita, a common proxy for quality of life. In our view, so pretty much they're saying that GDP per capita, by the way, is a great way to measure, or at least a decent way to measure quality of life, is just kind of like how much production, how much value is there per person in a society. And that generally equates at least somewhat to quality of life. But they're saying that physical and intellectual property rights correlate directly to GDP per capita. So essentially, the amount of value produced per person directly correlates to how much real ownership people have. And I think this is going to be the same in digital worlds as in the real world. In our view, says ARK, thanks to decentralized proof of ownership, digital assets are likely to increase online spending per capita. That makes sense. If you really own something, you're more likely to buy something. Like if you spend money on something, if you really own it, you're more likely to buy it than if you don't really own it. ARK forecasts, and if you can resell it as well, ARK forecasts that global NFT transaction volume will grow more than fivefold from 22 billion today to 220 billion by 2027. So 22 billion today is the NFT transaction volume. They're saying they're expecting that to grow fivefold by 2027. This is not 2030. This is fivefold in 5, 6, 7, in 4 years, fivefold in 4 years, they're expecting NFT volume to grow. That's crazy. That should get everyone in this space excited about being invested in the crypto gaming space. It's going to be huge. So if this happens, if we have a fivefold increase in NFT trading volume, that's just going to be wild. That's going to be great for companies like Gala Games and other like Illuvium, so big time, so many great companies, Champions Ascension. If I start listing game worlds, I just have to keep on going. Property rights versus GDP per capita. So this is a really, really cool chart. So this is the top 25 countries are like these kind of gray ones. And this is top 25 as far as intellectual property rights index. And then this is bottom 25 countries are these ones down here. And then the other countries are the ones in between. So then this is the trend line of property rights. So the more that a country respects property rights, the higher the trend line goes. And then GDP per capita. So this is the property rights index, is this like bottom line. So a 0 doesn't respect property rights at all, which I guess is on this side for you guys. And then an 8 respects property rights a lot. And you can see that like way up here, the highest country as far as GDP per capita, which is up at like $120,000 per person of annual gross domestic product. This country respects property rights a lot. And the further that you go down, so the less a country respects property rights, the less on a trend line, very clearly, the less GDP, the less production you get out of each person. And that makes a lot of sense. Because way down here, say you're in this country, one of the very worst countries that respects like your property rights at all, like pretty much nothing that you make is actually belongs to you. You have no incentive to generate any value. Why are you going to work your butt off and try to generate $120,000 worth of value if you don't get to keep any of it? So that's why as the trend line of property rights goes down, the average gross domestic product, average quality of life also goes down in countries. So if you take this real world data and then you put it onto digital worlds, I believe that we're going to see a very similar correlation where someone who might have enjoyed like trading and trying to make a profit in the World of Warcraft economy when they didn't have real digital ownership. And sure, there's black markets that were against terms of service where you could try to sell World of Warcraft currency for real money, but these exchanges were against the law and just not very liquid because of that, at least not as liquid as they would have been if it was like feature instead of a bug of this world. People who enjoy doing stuff like trying to make money in World of Warcraft are going to do that 10 times more when they really have property rights in this digital world. Because when they actually create some sort of value arbitrage and make money for themselves or do work having fun playing a video game and are able to get a reward from that and craft a sword or something that they can sell to another player because another player finds value from that, and they can get, then that player that goes on that quest gets some value from their time. Like, this is going to cause people to play video games so much more, produce so much more like in these worlds as well, because they actually own what they produce. And I think that this could grow gaming an insane amount, way more than throwing the term metaverse and putting social features in a game. Like, we already have that. We've had that for a decade. It's not new. What's new is property rights in these worlds. And according to this data, that is a really big deal compared to per player how much you're actually producing. Speaking of Gala Games, they're the sponsor of this video, a behemoth in the blockchain gaming industry. No other platform has more AAA game devs working on building the next generation of gaming. This means that if you don't have a Gala Games account yet, you need to create one. Use our link in the video description to do so. It's easy and free. Creating a Gala Games account will give you access to the entire Gala Games ecosystem and allow you to play all of the games that are already playable, like
Townstar, Spider Tanks, and Superior. I also highly recommend upgrading to Gala Gold. Myself, my editor Nate, sound engineer Josh, agent Aaron, and even my little sister Abby all have Gala Gold. That's because it's a $50 one-time fee that gives you a lifetime premium Gala Games membership, which comes with many perks, including free periodic NFT drops for upcoming games on their platform. I've personally gotten way more than $50 of value out of my Gala Games Gold membership, and I highly recommend it to all of you. Thanks again, Gala Games, for sponsoring On-Chain Gaming. Now, back to the list.
So, and I think as correlating to that, video games is like how much you're playing, how much revenue you're, like how much currency you're farming, how much trading volume you're doing per player. That's going to be going up a lot when players actually own stuff in these worlds. So just really, really exciting. There's so much more to get into in this ARK Invest Big Ideas for 2023. So if the next video in the series is up, you guys can click it on the screen right now. If it's not up, or this side, it will have the last video in this series. If you enjoyed it, remember to drop a big thumbs up, hit subscribe if you're not subscribed already. On-Chain Gaming is about the future of player ownership in the metaverse. I'll see ya in the next one.